David Schwartz revealed, Ripple XRP luring competitors' employees to work. In a Saturday tweet, Ripple CEO Brad Garlinghouse said that the U.S. Securities and Exchange Commission, SEC, has forgotten about its responsibilities to consumers as it continues to enforce regulation. The current price of XRP for today is $0.35, and the trading volume for 24 hours is $136,000,000 We are updating our XRP price in US dollars in real time. XRP has dropped 30% in the last 24 hours. Welcome to the Rich Club channel. If you like this video, don't forget to like it and subscribe to the channel. Do you think the analysts are right about XRP? Write the answers in the comments. Giving away 500 XRP at the end of the week. One random subscriber will receive XRP coins. Take a look at the instructions in the comments section. All you need to do is write the word XRP, watch the video to the end to like and subscribe. The Relative Strength Index, RSI, has not been definitive over the past few days. Last week, the RSI held a neutral value of 50 as support, but recently this level has not passed. Thus, there may be some volatile dynamics during the weekend. Similarly, the Awesome Oscillator, AO, was also below zero. He has not yet shown a strong bearish impulse. The A/D line had a resistance zone that was directly overhead and was indicated by two dotted white lines. If A/D can overcome this region, it will be a sign of sustained demand for the XRP rally. The Directional Movement Index, DMI, showed the absence of a strong trend. ADX, yellow, it was at level 20, ADI just above the 20 mark. Technically, this indicated a bearish trend, but in general meant the absence of a significant trend over the past few days. The $0.35-$0.36 range will be important to protect the bulls over the next day or two. The formation of a lower low below this area will signal bearish strength. Momentum indicators were inconclusive on the lower timeframes. Bitcoin could also strongly influence the direction of XRP in the near future. On Twitter, Ripple Technical Director David Schwartz urged employees of the FTX cryptocurrency exchange to consider applying to Ripple, claiming that the blockchain payment company is constantly recruiting employees. However, he outlined several exceptions, expressing the opinion that Ripple does not want to have anything to do with FTX employees on compliance, finance or business ethics, which may be related to shady practices on the crypto exchange. Hi at FTX_official employees not related to compliance, finance or business ethics at Ripple always hires. The facts show that the once leading U.S. cryptocurrency exchange is now facing insolvency. According to a Reuters report, the cryptocurrency exchange is currently trying to raise about $9.4 billion in capital to stay afloat, as the deal with Binance fell through. The report details that FTX CEO Sam Bankman-Fried, known as SBF, is appealing to competitors and venture capitalists seeking to raise $1 billion from each of them. The exchange has already received a loan from Tron to ensure the liquidity of TRX-related tokens, according to an announcement via its official Twitter channels. The exchange has started processing withdrawals again, according to data in the blockchain. However, the cryptocurrency exchange initially restricted withdrawals for Bahamian customers, according to a tweet yesterday explaining that it follows Bahamian rules. Although he assures that he will eventually reopen the services to his customers around the world, users are not buying it. It is noteworthy that this is not the first time that the exchange gives guarantees to users this week. On Monday, SBF assured users that the exchange and its assets are safe. However, Changpeng Zhao's announcement that Binance plans to sell its FTT assets confirmed reports by CoinDesk and Dirty Bubble Media that the exchange was illiquid. It is noteworthy that yesterday SBF attempted to apologize in a long Twitter thread for the misuse of about $8 billion of user funds. He claimed to be working on getting loans so that users could get their assets back. Ironically, the FTX head tweeted CZ, saying, "Well played, you won." Today, the non-profit organization Blockchain Association has applied for permission to provide a summary of the litigation between the Securities and Exchange Commission and Ripple Labs, which will provide additional context on how the agency's arguments in the case may affect the broader crypto industry. If approved, the accompanying amicus curiae note containing the group's arguments will be taken into account when the court makes a summary judgment. These types of summaries can offer context and insight into existing facts, but cannot bring new facts or evidence to the case. The case before the U.S. District Court for the Southern District of New York recently reached the summary trial stage, and both sides argued that the trial was not necessary because the facts were not disputed, and instead asked the judge to rule on the case based on the facts already presented. The Blockchain Association, a Washington, D.C. based advocacy group, seeks to give context to the broader implications that the ruling could have for the crypto industry. It would not be an exaggeration to say that the decision in this case, if it is not related to specific facts and legal issues that are minimally necessary to resolve this case, can have extremely adverse consequences for the industry with a turnover of $1 trillion. Given the limitless possibilities of blockchain technology, this could negatively affect a significant part of the future American economy, the Blockchain Association said in a statement in support of the report. The proposed review includes industry examples that illustrate how tokens are used in practice outside of what is considered an investment contract. The SEC first filed a case against Ripple in 2020 because it allegedly failed to register its XRP token as a security. Since then, during the trial, the SEC has argued that XRP is considered a security not only during the initial issue of the token, but also during its sale on secondary markets. The SEC's draconian view that a token originally sold under an investment contract continues to be inextricably linked to that investment contract when it is subsequently transferred, even if any legal rights between the issuer and the original buyer are not transferred along with the token, will almost destroy an entire industry, the amicus report says. The summary attempts to give an idea of which part of the industry may fall under what it considers to be poorly defined rules for the use of tokens. He also disagrees with the pattern of regulation by enforcement of the SEC and the history of inconsistent, incomplete, and confusing public statements. The SEC's position that market participants can simply follow securities laws is untenable because securities laws do not take into account how an asset that could have been issued as a security can exist when it is no longer tied to any form of investment contract. Crucial attention when trying to apply the Howey test. The Blockchain Association's request joins attempts by a number of other groups to present their amicus arguments. U.S. District Court Judge Annalisa Torres granted Investor Choice Advocates Network and Spend the Bits requests to file amicus curiae briefs in support of the Ripple blockchain company, which has been fighting an exhausting battle with the U.S. Securities and Exchange Commission for almost 2 years. The cryptocurrency community is discussing the SEC's victory over the LBRY crypto company. In May 2021, the SEC sued LBRY for offering unregistered securities to American investors. The Securities and Exchange Commission filed a lawsuit against LBRY, a digital content distribution company and a trading platform for it, just a few months after it filed a similar lawsuit against Ripple. Many crypto and legal analysts predict that the outcome of the LBRY case will play a key role in the Ripple lawsuit. Attorney John Deaton, founder of Crypto Law, was among the legal analysts reacting to the SEC's victory over LBRY. In a tweet today, Deaton noted that the Securities and Exchange Commission will refer to the LBRY verdict in its upcoming brief responses to Ripple's motion for a summary judgment. He said Ripple would also likely mention the case in the company's own response to the Securities and Exchange Commission's motion for a simplified procedure. He also expects the SEC to take advantage of its victory over LBRY in the Ripple lawsuit. Deaton also pointed out the difference between these cases. This decision is in the First District. The Ripple XRP case is in the Second Circuit and has a different precedent, as does the Upton case, he added. I didn't have time to read it, but I'm sure SECF will quote it in a short answer in a couple of weeks, and at Ripple will distinguish it by the facts. This decision is in the First District. The Ripple XRP case is in the Second Circuit and has a different precedent, as does the Upton case. In a separate tweet, Deaton also said that the SEC won an impeccable victory over LBRY, since the court did not distinguish between the sale of the token. He added that the SEC and its chairman Gary Gensler will use this case as an example against crypto projects in the future. Unfortunately, this is a complete victory for the SEC, as the judge does not distinguish between secondary market sales independent of LBRY or future sales compared to past sales. Get ready with that, Gary Gensler? And the SEC will use this case as an example to move forward against crypto. Lawyer Jeremy Hogan, a partner at Hogan, also comments on the development. Lawyer Hogan also expects the SEC to take advantage of its victory over LBRY in the Ripple lawsuit. LBRY fought a good fight but lost in summary proceedings. The judge pretty much hung his hat on the fact that the tokens were practically not used during the sale. I expect this case to get into the final report of the Securities and Exchange Commission on the Ripple case. The court added that the main problem with LBRY's fair notification argument is that it offers nothing other than its frank statement that this is the first time the SEC has tried to apply a registration requirement against an issuer of digital tokens that did not conduct an ICO. The court further stated that LBRY does not point to any specific SEC statement that companies should comply with the registration requirement only if they conduct an ICO. The court concluded the SEC did not base its enforcement actions here on a new interpretation of the rule, which under its terms does not explicitly prohibit the relevant behavior. Instead, the SEC based its claim on the direct application of the respected Supreme Court precedent, which has been applied by hundreds of federal courts across the country for more than 70 years. While this may be the first time it has been used against a digital token issuer that did not conduct an ICO, LBRY cannot claim that it did not receive fair notice that its conduct was illegal. The SEC's approach to regulation through enforcement is not popular. But despite the unpopularity, until the laws are changed or the SEC suggests a more viable way forward, issuing tokens according to current models will remain a challenging task. The Securities and Exchange Commission is stepping up its enforcement efforts. This decision is likely to contribute to the development of this trend. If you are issuing or have issued tokens, you need to make sure that you have protected your legal grounds. What do you think are the prospects for XRP in 2023? Write your forecasts in the comments. Thank you for watching this video to the end. Please do not forget to like it and subscribe to the channel so as not to miss the release of new videos, and do not forget about our contest. Write in the XRP comments to add 500 XRP to your account.